Thank you, Shiv. Hi, everybody. My name is Eng Tang, CEO, founder of Tozi Capital, and I'm excited to present the fourth iteration of our Bitcoin mining fund. And I'm excited that it's four because um, I think for me, it's been a journey into Bitcoin and journey into Bitcoin mining. And I think this is slightly a culmination of all the hard work we've been putting into. And I'm very excited to continue presenting these type of offerings, these type of investments, and of course, answering all your questions. I think hopefully this is a very informative presentation. So on the contents, we'll just go through quickly confidentiality, the investment overview, why Bitcoin mining, investment offering, and details of the investment, and the planned sites, and then we'll go into Q&A. So I don't want to spend too much time on slides, but I do want this to be interactive, as Shiv said. Typical confidential disclaimer, just let us know if you want to share it. Although we do appreciate when people do share and refer your friends and family to this great investment. I want to start with, talking about Tozi Capital and Tozi Capital Bitcoin Mining Fund 4. And you are doing a fourth iteration of this. You just closed the last one a few weeks ago, a month ago. When are you going to do more real estate deals? Well, I love real estate. I love yield producing assets. And these are some of the investments we've done in the past 12 months. It's a culmination of a lot of stuff that I've done for the last 12 years. And we will continue to provide great real estate investments. In fact, we have some available now. But I also really like the thread of yield producing hard assets. And yield producing assets in real estate is something that I want to continue to. We will continue to do that. But I also don't want to buy it in a upmarket or buy get overbid by several $1 million, which happens all the time, and not have great cash flow for you, the investor, and for me, because I'm an investor in every one of these deals. But I just want to highlight that we do have real estate. That's our background. We like yield producing assets, and we'll do more of them. But Bitcoin Mining Fund 4 is a combination of both yield producing assets and real estate. Our investments in Bitcoin mining has spread across America, and we continue to focus on developing strong relationships with energy providers and hosters and all kinds of technical partners. Our current Bitcoin mining deployments span across Nebraska, Georgia, Colorado, and I was just in Kentucky this past weekend, setting up our latest investment. And I want to highlight that when we first launched Bitcoin mining, we launched it earlier this year. We launched it when it was kind of a euphoric time in the market. It's just spiked. And I appreciate everybody who came with me on that journey for the first fund. It was something that you were doing for the first time. I have had Bitcoin and been mining Bitcoin, but I appreciate everyone coming to that journey. I want to highlight that we have done very well, even when the price has been not as high. And as it gone higher, we do continue to do well. So these are real returns, and I'm proud to have delivered nearly 40% returns in the first 4 months to investors in our first fund. I also want to highlight the lag between when we set it up and when we started. That's generally typical with Bitcoin mining funds or Bitcoin mining deployments in general. So my personal timeline with Bitcoin. I bought it really early in 2013. I remember the price. It was in the double-digit range, and I spent a lot of it. I didn't spend 10,000 of it like the guy who ordered pizza, but spent enough that I kind of don't want to remember the math on that. But as anything, I thought it was a really interesting technology, and I started to tinker with proof of work as well more recently, and just recently we launched Bitcoin mining in 2021. A lot has happened between that. A lot of adoption has happened. And that's why I feel very confident in introducing Bitcoin mining for our investors this year. So why Bitcoin now? fundamentally, I believe there's a sea change this year in 2021 of wider institutional adoption. More capital markets, more institutions, more corporations are considering using Bitcoin on the balance sheet in place of cash. And it's in replacing gold in many ways. It's a great store of value, and wider institutional adoption, you're seeing big companies like MicroStrategy and even highly regulated market companies like MassMutual. When you see an insurance company join, you know that there is a big sea change happening. Increased consumer use. PayPal, Venmo, they're all creating new technology layers to be able to allow consumers to use Bitcoin as a transaction currency. It's also a great hedge against the dollar. And for me, then, real estate investor, I see what's going on in the market. I see what's going on in America. We are printing trillions of dollars. And you probably heard all these stats of how many dollars have been printed in the last 12 months versus before. And then all the stats of inflation. I think real estate, Bitcoin are great hedges against the dollar. They have great hedges against inflation. Bitcoin has known and fixed scarcity. You can't just print $4 trillion by a century authority. And that creates a really strong, massive potential growth. And even from today, I believe there's still very strong, massive potential growth, especially since Bitcoin is just being held by less than 1% of all Americans, and it continues to see wider adoption across the board. So why Bitcoin? I think hopefully we're here. We believe Bitcoin is a good asset potentially, but why not just buy Bitcoin? Well, the simple answer is, why buy one Bitcoin for X amount of dollars when you can buy with the same X dollars, buy 1.5 Bitcoin? And that's the output of Bitcoin mining. When you invest in Bitcoin mining or Bitcoin mine yourself, you put capital and energy, two forms of currencies in proof of work, to then create Bitcoin. And it's provided over time, but it's more. So I like investing in things where I have an advantage. And I like to invest in things where I would typically buy Bitcoin anyways, but I'd rather buy Bitcoin at a discount. Another thing I like about Bitcoin mining is that it feels very familiar to me relative to all my cash flow investments. It's cash flow, tax benefits. Cash flow through the form of monthly distributions, just like real estate, and dividends can be provided in USD or Bitcoin. And Shiv has helped us out in optimizing our practice of collecting your wallets and distributing on a timely manner. And as we scale up to hundreds of investors and potentially 1,000+ investors in the next year, we are optimizing for that process. But cash flow in the form of monthly payments is unique in this industry. You can invest in Riot and Marathon. They have hundreds of millions of dollars of cash on hand, and you'll see that your balance appreciate based on the share value, but you'll never get Bitcoin. You never get cash flow unless they provide dividends. Another part that I like about Bitcoin mining, similar to real estate, it's very depreciable. Amazon paid almost no taxes in federal taxes because they use 85% of their tax shelter through depreciation. They depreciated data centers, warehouses, and trucks. Any yield-producing, income-producing asset can be depreciated. This includes Bitcoin miners and data centers. So I love this investment because it encapsulates a lot of depreciation, which is provided in our typical format of investing in an LLC, investing then in an operating company, and then receiving a K1 that will highlight your depreciation. So hopefully very similar to other real estate investment deals that you've invested. So this is it's a very simple Bitcoin mining fund 4. We have a very high target IRR. And I don't really want to lead with that, but that's definitely an upside. That's a realistic price target of 383K in 5 years. This is with the mindset that you're holding the Bitcoin and you're taking that appreciation as well. And equity multiple is 7.5 multiple. Now, if you sold Bitcoin or if you took it in cash the whole time, the whole 5 years, with this realistic price target of linear growth to 383 within 5 years, you would probably only see around a 3x equity multiple. So that extra 4.5x comes from holding that Bitcoin and that capital gains from that appreciation. But it's still a great depreciation benefit, no matter what, which gives you a lot of your, it gives you a great tax shelter for your investment basis. And you have great downside protection. I think that's one of the things I like about Bitcoin mining. We are very profitable now. Our first fund is running at 85% profit margin, and that's at today's prices. But if we were at 11K or 12K, our profit margin would be low single digits. We'll still provide investors returns, but it won't be as strong, of course. We have quick return of capital as well. I think I really like that concept because it gives you sort of your capital principal back as soon as possible, and you can then reinvest it in something else or compound it. The term of investment is 5+ years, and it's not set because it's really buying miners and deploying it into Bitcoin mining and running them till they no longer are profitable or no longer work. And of course, we'll have cash on hand to repair and maintain. But at a certain point, if the competition grows in Bitcoin mining and the price does not grow in same respect, your miners will be not as new, not as efficient, not as effective, and past 5 years, it could not be potentially not profitable. But our term investment is modeled at 5 years. All these net investor returns are at 5 year. It could be longer than 5 years. And I'm targeting a 9% monthly return in the first year, break even of 10K. So very simple, very similar to our first 3 funds and investments and deployments. And we have a lot of track record in how to handle it and how to distribute it in this fashion. So very confident in these numbers. A second part of this investment, and really a separate investment altogether, is a data center income fund. And I love data centers. I love income in general. And this probably looks familiar to some of our other income fund investments, where we provide 12% annualized returns, 1% a month. So you invest $100,000, you get $1,000 a month. You also get bonus depreciation, and it's a triple net lease to Bitcoin miners. That's how we're getting that nice fixed return by essentially capitalizing, deploying, and developing data centers, and then leasing it out to Bitcoin miners, which would be us as well at a market rate. But we do have LOIs by large partner companies that could take that space if we want additional revenue. So that's how it's getting secured. In addition, that triple net lease or that contract is secured against the miners itself, which are significantly more valuable than that contract. And so that's monthly returns starting next month, and that's accrued next month. So I want to just highlight that because it might take a few months to get going, but I do want to allow everybody to start having returns or start earning money as soon as you deploy your capital, because we'll be deploying it and we'll be putting it to productive use. And it is a 3-year investment, although we are working on having some liquidity and redemption options in the first year and second year as well. So very simple, and we also have an Excel model that highlights all this stuff. It'll be in the data room, the offering room, which we'll send after the end of the presentation, right, later tonight. I want to talk about 3 scenarios. And yes, there's a realistic price scenario. And I think that realistic price is 383. That is sort of average of a bunch of different prognosticators, right? Cathie Wood says 500K plus, and there's many other analysts that say million plus, and there's many other analysts that say less than that. So a little bit of an average that does yield that really nice 93% IR, very strong for us, turn capital back within a year. But I do want to highlight that when I model these things, I also think the worst case scenario. And none of these are really that realistic. Bitcoin is not going to go up in a linear fashion to 383. It's going to go this way. It's going to come here. Now, if you hold Bitcoin, doesn't matter because you get the same amount of Bitcoin. Doesn't matter. Well, it's changed a little bit based on the fixed energy costs that we pay, but doesn't change too much. Bitcoin is not realistically going to stay flat for 5 years. That's not how this asset has performed. But I do want to highlight that, if Bitcoin stays flat and at a projected price of 65K, starting when this fund starts, this investment starts, you still have a very healthy return on investment. Strong IRRs, 22%, and a 1.45x equity multiple. And that's, if you bought Bitcoin and it stayed flat, you get 1x. And best of all, if it falls down by half, I think if you're choosing the option to sell Bitcoin every month, or really choosing the option to receive it in cash, you still get a very nice return. Not as good as the other ones, not something that I would target to invest in, but it highlights that if Bitcoin falls by half over 5 years in a linear fashion, so all kind of unrealistic, you still have a positive return on investment. None of these IRRs include the depreciation benefit in the first year. If you include that, that would be a much higher IRR as well. And my model does highlight that. And net investor return projections, number of projections, but we do have 3 funds, really 2, one strong track record of sending 9 to 10% returns, almost 11% last month, close to 10% this month, probably. We're targeting at 9% average over the first 12 months, and returning capital back within a year. And it does fall off as we start getting to the investment terms of profit sharing, and that difficulty does increase. We will be mining less Bitcoin over time. That's just a function of the competition increasing. When 10% more Bitcoin miners are introduced into the network, that means that you, as a Bitcoin miner, receive 10% less Bitcoin. That's a trend that we will see going forward. We are buying Bitcoin miners, and lots of people are buying Bitcoin miners and deploying them, but it's all modeled out in our projections in somewhat aggressive fashion, but also conservative fashion as well. And finally, also I want to highlight that we're also kind of being conservative, because I am not, while I am modeling out the halving event, so every 4 years, the block rewards, which are 6.25 Bitcoin every 10 minutes, reduced by half. To be in May 2020, it was 12.5, now 6.25. And in May 2024, it will be half of that. And typically at every halving, as we call it in the industry, price does jump up respectively as well, as there's a smaller stock to flow ratio, which generally drives up the value of these assets. So I am including the halving, but I'm not including the halving effect too. And I do want to highlight that it is low cost of mining. And it's not really to say that this is break even, because you do have the cost of the capital first, but as long as we're above 10K, we're profitable. And how do we maintain that? Well, when you have energy efficient miners and you have low cost of energy, that's how you create a very nice protection against potential bear markets. It's actually a very interesting concept. And we've seen this play out over the past few months as well. When Bitcoin price went down and it's gone up, when Bitcoin price goes down, more machines are generally less profitable. And if they have higher costs of energy and less energy efficiency, being older genset miners or older models of miners from several years ago, they become less efficient and less profitable. Only when Bitcoin really went parabolic this last cycle, did all these old machines start getting plugged back into the network. They could be unplugged again if there's a bear market. That means an increase in production for our miners, as we are one of the highest efficiency machines and very low cost of power in par with all the publicly traded companies. And this is how we're getting sort of low cost of mining by combining these two factors. I do want to highlight that the investment timeline is we're going to be deploying capital as soon as we receive it, and we have ready orders on hand. We already have been working on infrastructure. What I've learned in this industry is that the delays are a constant. Delays are a fact of this industry, as delays out of China, delays out of shipping, logistics, and supply chains. Everything is delayed. And that's the case with almost every industry. I just bought a Model X for my wife, and it's going to be delivered in July or September. And it's going to be delivered in a while. They use the same 7-nanometer chips as, silicon chips as Bitcoin miners. I'm sure 7-nanometer. Now, while we're confident in our supply chain, there could be slight delays. And while we're targeting a end of Q1 go live date or beginning of Q2, I do want to state that your capital will be earning as soon as we receive it, and that means that you'll be receiving a 6% annualized return before Bitcoin mining starts, which hopefully is better than where you could put your money anywhere else, and that will be paid at the end of the first year. This doesn't get capitalized into an investment, but obviously we want to get mining Bitcoin so you can start earning 9 to 10% returns monthly. But still, this is a far better use of capital. I want to go a little detailed, and I know because we have the experience here now of how we run our fund management. And this is based on Fund 1, which will be replicated across all of our other funds. We plug Bitcoin miners, the computers, plug into the network to validate transactions and secure the blockchain, and reward Bitcoin for the process. And this reward of block rewards is random. 6.25 Bitcoin is rewarded. That might seem like a weird thing, but you're essentially solving a mathematical problem. And the algorithm of Bitcoin does is that it creates increased difficulty or reduced difficulty if that block reward is given out more than 10 minutes or less than 10 minutes, so that we can triangulate for 10 minutes. A little bit more detailed than potentially, without context, but ultimately, when you plug in machines, you get into network and that are specialized to produce terahash and solve these this mathematical problem, you get potentially rewarded Bitcoin. If you plug it into a pool, which means you aggregate it with thousands and hundreds of thousands of other machines, and Foundry just announced that they are the #1 Bitcoin mining pool across the world now, and they just started earlier this year. In fact, we were one of the first clients, so very happy to see them grow. So we plug into the pool, we see a Bitcoin mining, we see how much we get every day. We get that every day, and then we sweep it into the funds wallet. So this is what we see, and I have noticeable access to this. And then every month, we sell a fixed portion of that Bitcoin in USD to fund the operational expense, pay the rent, pay the power, pay OpEx. And for Fund 1, it's roughly 15% of the total revenue or total mined Bitcoin. And then the remainder gets sent to you, the investor, whether you're choosing cash, which then we will sell at spot price and send to you as a ACH payment, just like any other real estate investment or all of our other previous Bitcoin mining investments. And of course, for those who prefer Bitcoin, and that's something I will be doing myself, I'll be receiving my investment in Bitcoin because that's what we're all here for. Hopefully, you can take it in Bitcoin, and we can help set up your wallet. We can help make recommendations. Of course, you have all that. That'd be great. Taking your investments in Bitcoin also it's a little faster. Also, we send it to the blockchain network, and it's fairly instantaneous. Couple of hours, maybe at max, versus ACH, which takes a few more days. Most of our investors have taken their investment in Bitcoin, but we create this investment so that it's, if you don't care about Bitcoin at all, and you just like 9% cash and cash every month, you can just say, I don't care about Bitcoin. I'm going to take it in cash. And we have lots of investors who are very happy with that. We want to make sure that it is not just for people who are looking to buy Bitcoin or invest Bitcoin, but for any investor looking to get great cash flow. And the Bitcoin mining fund terms, same as last time, 5+ years, return of capital within 12 months, monthly distributions in USD or BTC, Bitcoin, 90-10 profit share, then return on investment, and that 10% mostly to pay for our OPEX accounting and other processes and salary. 50-50 profit share after return on capital, and a 50,000 minimum for this investment.
I know we are going in the flow. Just wanted to let you know that we have close to 50 questions. So we're going to stay here all night. So maybe if you can wrap up in 10 minutes, that'll be awesome.
Yeah, I'm almost done. And simply stated, today's income fund, it's a pref equity deal, which means that it's a fixed return, 12%. It doesn't matter how much your occupancy is or our rent is. We're paying 12%. And we are confident, comfortable with that return number. That's how we do it in a lot of other funds. It's a safe capital stack, and you get 1% monthly returns. I also am we are working on offering, and we'll be probably offering early liquidity so that you can be redeemed in year 1, 2, or 3. So if you know you need to get your money back within a year or with 13, 14 months, maybe you want to buy a house. And you want to deploy capital in still a very productive asset, getting 12%. This is an option for you as well. And of course, it is 3-year hold time if you want to stay the whole time. So we will be evaluating potentially extending that optionally. And so I want to just wrap up these presentations with where we were, where we're going. And we talked about home base. And home base for me is really certainty. What I've been doing the last 3 months has been traveling all over the country, talking to everybody in the industry and trying to get a home for us, a predictable home with low cost of power and green renewable energy. And we believe we found that in Sandusky, Ohio. And it's an ex-GM plant that we will be subleasing out, not purchasing, because it's 1.3 million square feet. We actually don't need that much space. And Jim, I'm going to call him tomorrow to close the deal. I think we are very excited to be in a state that has very low power. But we also have several other sites that we're expanding and working on. And throughout 2022, we will be continuing to grow so that we ensure that we can have a home, which has been the bottleneck for everybody in the industry. It has been a bottleneck for anyone trying to get Bitcoin miners going. There are stories of barges in the Pacific where miners are just floating around on ships because they don't have places to plug in and mine Bitcoin. And we have some great green energy sources and included with the grid, but allows us to have lower cost of power. Final notes here. We will have investment dashboard just like our Fund 1. This will allow you to check on a daily basis, real time, what your current performance of the fund is. Essentially, will be an API directly to our pool. We will also allow, like all other investments, self-directed and solo 401ks. We're partnering with Alto IRA, but you can go to any other IRA, self-directed IRA fund. Alto IRA specializes in crypto investments, in addition to like Rocket Dollar. These are great low-cost solutions, but this investment is set up so that you do remove any UBIT exposure or any self-employment taxes to a block entity. We also will be, well, I don't want to say we also, Shiv, you might kill me on this. We are potentially looking at exploring, no promises, compounding your dividends, compounding distributions, and potentially future investments, or at the very least, providing you a small yield as we stake your Bitcoin. That's something I'm doing. I like to earn on everything I have, including all my assets, including Bitcoin, and I'm doing that, in DeFi, and that's also in DeFi. In the future, no promises, and Shiv will kill me. We get to really hire potentially some very smart folks and good project managers, we will potentially be offering borrowing against your Bitcoin. So you've earned 200K of Bitcoin. You want to invest more to 200K. You don't want to sell your Bitcoin. Good on you. You could then leverage your Bitcoin, and we don't need to do it for you. We can recommend some good platforms that does it. We can even show you how to do it yourself. It's probably easier, and you can leverage your Bitcoin if you take your collateral value of 200K, for example, or 50% LTV, and within a couple minutes you have $100,000, just like an SB lock, but it's a Bitcoin line of credit, and that interest rates is not that single digits usually. So to conclude, we are an experienced team for iteration. We have strong technical partners and JV partners all along the way that I'm not really highlighting, but that we're part of, and we're leading into. It's a levered bet into Bitcoin. Why buy Bitcoin when you can invest in Bitcoin mining? I think that's just a simple answer. Fast return of capital and high IRR, get your money back within a year, projected, and strong downside protections and tax advantages. So with that, and then we have a lot of questions. This is going to be our favorite part of the presentation, Q&A.
Awesome. Thank you so much, Eng. I know it takes a lot to put things together. So to all our investors, what I have done is to open all questions to all investors. So if you go to the Q&A feature, Q&A button, and click on it, you will see all the questions that other investors have asked. Feel free to upvote any question. You can bump up any question that you feel is really relevant. That way we make sure we take it early as part of our discussion. So I can already see the upvotes coming in. So you just need to go click on the thumbs up link. That way we know which questions most investors are invested in, and I'll take it up in that order. Another thing that we will do is I'll probably take up objective questions for which we can give an objective answer first, and then subjective question, what do you think of China? What do you think of the world economy? We'll probably take it down later. And Eng, this is just for your clarity. Since we are bringing two distinct and independent funds, which happen to be working together, please take each question as a question for one fund, or probably sometimes both funds as well. I'll make sure if that clarity is not provided, I'll prompt you on that. Because when somebody says when are distributions due, they are asking for two different funds, right? And to all the investors, these are actually two different offerings. The data center is an offering. The Bitcoin Mining Fund 4 is an offering. It is just that these two funds work with each other, just like any two business entities work with each other. All right, the first question, upvoted question, I think I'm really liking this upvoting feature, is for investors who invested in Fund 2 and Fund 3, will you be providing 6% for the delays?
Unfortunately, that it won't be the case for Fund 2 and 3, although the pain of Fund 2 specifically was the reason why we're doing this. But the Fund 2 investment was a very good investment because we did provide upfront capital. At this scale, it's harder for us to provide upfront capital. So in lieu, we're providing the 6% annualized return.
I also want to add, and if I may do that, Eng, is we are constantly learning about what is happening in the industry. Eng has always wanted to provide distributions as quickly as possible. We could not predict the supply chain crunch. We could not predict the kind of mad rush for shipping containers that we foresaw. So we are constantly learning. But in order to go back in time and to make up for certain macroeconomic scenarios is fiscally and accounting wise very difficult to model. So that's something that I wanted to put out there as well. The next question, Eng, the top 5 public miners make up 60% of all mining power on the Bitcoin network. They are planning on increasing their capacity by 5x over the next 12 months. Do you think difficulty might increase more than what you're predicting or modeling for?
Yes, the short answer is yes. It's something that we're keeping an eye on. We do have logistics information of all these orders, but you can order a lot of Bitcoin miners, and that's probably a good bet because they do appreciate in value with Bitcoin going up. It's actually even a levered bet. I mean, that's Bitcoin mining. But the other side of it is infrastructure, power, hosting. And what I've seen is that people have delays, and failure to start. Lots of promises in the industry, lots less delivered. And while we all talk about 1 gigawatt, 100 megawatt, whatever power, what I've seen is we see it when we see it. But I am projecting a significant increase in difficulty, which is essentially the increase in competition of Bitcoin miners, which does affect how much Bitcoin we mine. But I agree that it will be more difficult, something to monitor. And that's why I like to provide our structure our investment to return capital back as fast as possible to the investor. So that's why we provide, we have no asset management or acquisition fee. It's capital in, capital out to you as fast as possible.
Awesome. And it looks like the upvoting feature is working really well. That way we know what most investors are interested in. But rest in peace, because we will absolutely answer all the questions. It's just the upvoting helps in prioritizing the question. And the next question is, for Fund 4, Bitcoin Mining Fund 4, will the depreciation be for tax year 2021 or 2022?
When you put a asset into deduction, you get your depreciation. You can do the bonus depreciation. It is unlikely, very highly unlikely that it will be for 2021 because we need all the pieces to work. So most likely I would plan for a 2022 bonus depreciation.
This is for Fund 4, right?
Yes.
The 6% interest while waiting for the miners to come online. Where does that money come from to pay the 6%?
That's really a basis of this hardware arbitrage that we take into account. In my previous funds, I've upfronted the capital. We've taken advantage of time series. Basically, when you buy miners, if you buy miners that are 3 months out in the future, they are 10 to 15% cheaper potentially than miners buying spot. So this is sort of a way to reward the investor for helping with this supply chain and upfront capitalization of Bitcoin miners.
Thank you. Which one is this for? Which fund? Okay, let me ask the question, then we can do that. Are the cash flow distributions in year 1 going to be return of capital or return on capital? And how will this be reported on investors K1? I think this is more applicable for Fund 4. Yeah.
I did want to just touch base on the 6%. That would be provided at the end of the year, and that would be provided from the manager's returns. So that's from our portion of our share of earnings at the 10% profit share provided to you, the investor, from selling Bitcoin throughout that whole year. What was the question?
The question was basically, give me 1 second.
No, it was regarding
the cash flow distributions, return on capital versus return of capital. Like whatever gets returned in the first year, what is it and how will it show up in the K1?
I think that is a very interesting question that I still get some mixed reviews on from different CPAs, but the safest answer is it's a return, not return on capital, not return of capital. So that is a taxable income. So if you were going to make $100,000 on a $100,000 investment, that wouldn't necessarily be return capital, where in most return capital investments, you don't have that return. You take that 100% depreciation, that allows you to essentially neutralize most of that initial return of capital. And then when you depreciate an asset, you can sell it, which at this point, the minus zero cost basis, which if you think about real estate, that's what essentially is. You're buying a property, you depreciate it, you have some residual value, you grow it and appreciate it, and then you sell it, and you have a capital gains event. In this case, there's no capital gains event at the end of the fund.
you. Can you talk about the status of Bitcoin Fund 3, Bitcoin Mining Fund 3?
Bitcoin Mining Fund 3, we have a significant portion of our miners already landed. In fact, all of our miners landed, or significant portion of the miners landed with Elite Mining. And they are in the process of modding to prep for immersion. They also process of deploying in the next month and over the next month for the next 2 months. That's been our plan all along, to have a deployment with the next 2 months. We also are placing some miners in alternative areas with alternative hosts, including in Kentucky, where we have Battlefield mining, but that's air cooled. We found very strong economic value there, and we want to start mining Bitcoin as soon as possible. In general, what I would expect is that our mining distributions would happen in Q1. I'm hoping January, but I know that's potentially unrealistic, and so February would be very realistic.
I'm going to jump the queue and ask another question because it ties in. You might as well give an update on Bitcoin Teracell Fund 2, Teracell Blockchain Fund 2 as well, because there are questions.
Yeah, so Teracell Blockchain Fund 2 was our, it's taught us a lot on delays and finding reliable hosting partners in the States, which is the key thing here. We finally got all online a few weeks ago, and we're hashing and we're mining Bitcoin. We mine more than almost 2 Bitcoin. So not a significant amount, but it's much more fun. And we will be sending that distributions in the beginning of December to investors, or right after we collect everyone's Bitcoin wallet. We're going, I believe Ryan and the team is going through the process of asking Fund 2 investors for that. So we're sending distributions as next month. Very excited about that.
Thank you so much. So this then leads us to the question, how different is Fund 4 from your previous funds?
Economically, there's some variation. Now, price changes. Structurally, it's the same. Fund 4 is structurally the same. You're essentially buying a set of miners that you're capitalizing on, that the fund's capitalizing on. And then that is not necessarily going to be reinvested in buying more miners or replacing stock, or we do have some reserve cash to replace and not replace, but to renew and refurbish and rehab, broken down miners or just any motherboards or PSUs. But it would be essentially those miners would be for you. All the Bitcoin that we mine would be for you, and so structurally it's all the same. What Fund 4 does, and it allows us to get a little bit more scale, and that's something we definitely need going to 2022, as there's going to be more difficulty and there's going to be a little more competition for these hosting spots. So we wanted to have our own site, develop that with the data center income fund, and then have a predictable place to put on miners and grow in a predictable fashion.
And can I just add a couple of more aspects to it? So to all our investors, see, people who got in Teracell Blockchain Fund 1 and Fund 2, that's early access, right? So Teracell 1 investors already have got close to 40% of their investment back. So obviously early start is a great advantage. Now Fund 4 is a later start. So while the business model could be the same, time is a huge difference. But we can also not deny that we got lucky with Fund 1 and Fund 2, because how much ever awesome Angus, it was a new angle of investment for Tozi Capital. We got lucky that we could get operational in Fund 1 and Fund 2 that quickly. Think about Fund 4. By the time Eng's doing Fund 4, his reach in the industry, his direct contact with Bitmain, his ability to talk to all the big guys in the industry has just exponentially increased. So Fund 4 investors get the advantage of more knowledge, more reach, more scale with this fund. Fund 1 and Fund 2 are early adopters who are already benefiting from it. Now we have so many investors asking us, why don't you just make it one global fund? Why so many funds? For people who understand what happens in the world of private equity, private alternate investments, It's not possible for us to put it all under one fund because of the way we are structured. We are a small organization. So we'll have to split it into different funds to take advantage of the exemptions that are available. So it just makes it legally required to split it across funds. And we also make sure that every fund is independent and it's not cross-wired so that we comply with SEC regulations. That's about it. I think the next question is, does the depreciation offset only business income or capital income also?
So there's three types of income. There's active income, portfolio income, and passive income. Passive investments in businesses like real estate or Bitcoin mining is passive income. So offset other passive K1 income in that category.
I understand the current cost of mining Bitcoin is 10K. What is the projected cost of mining a Bitcoin over the next 5 years?
That's a tricky question because I think that's, it will essentially be more because even if Bitcoin price stays flat, our cost of energy and cost of OpEx stays flat. We will but our potentially difficulty, meaning that the competition of Bitcoin miners will increase. If it increases 2x, then we're mining half the Bitcoin. And if Bitcoin price is the same, then instead of an 85 or 80% profit margin, it gets cut. So our cost of mining generally gets up because we just produce less Bitcoin over time. So it will grow over time. Of course, these are unrealistic projections on flat Bitcoin price or linear Bitcoin price growth. It's a volatile speculative asset. It's an asset that I believe it's digital gold and can maintain its store value over the long run.
We're at 15 minutes. I just wanted to make one announcement. Ryan has shared the offering details of both these funds, the independent funds, the data center fund and Bitcoin mining fund 4 in chat. So you should be able to go and view the details. I do want to caution all investors that the e-signing of documents is still not there yet. There's no big issue with that. It's just that the entities, we create so many LLCs when you do that. A few of these entities, we just need to iron out with our attorneys. That is why the e-sign templates are still not available. Go ahead and make your investment request if you're comfortable. You will be able to sign the documents in a week or so. We'll give you an update. But do not fret if you're not able to see the documents because they are not there. We just wanted this to be available to everybody before Thanksgiving break.
Yeah, and
go ahead.
Sorry, yeah, we wanted to release this now because we wanted to make sure that you guys have the opportunity, if you guys reserve or click that button to invest, that we will honor your commitment. Why, the other lesson learned is like releasing anything during Thanksgiving break. Everyone's sort of, lawyers have to go on holidays as well. So it just can be a little bit slower, but we should have that up soon.
How do your miners compare to the rest of the competition? How can you be assured that your miners will still be profitable in 5 years?
Our miners are the latest gen set miners. We will be acquiring those miners from with our direct sources. And those are the same kind of miners that we have for our previous funds. Although we will also be economical if there are more higher efficient miners or higher effective miners in terms of price cost basis. That'd be great. But I'm aware that Bitmain is releasing a more efficient miner, more productive miner, but they're pricing it similarly to today's price. Now, the trend over time, year over year, is yes, Bitcoin miners are becoming more powerful, slightly more powerful, not linearly more powerful, not geometrically more powerful. In fact, S19 Pros released a year ago are 110 terahash, and the S19J Pros released in July are 100 terahash, so a little bit less, but more energy efficient. The next one is specifically catered toward energy efficiency. That's the trend in this industry. Yes, our competition will be more energy efficient. They will have potentially higher profit margins, but we would have mined Bitcoin for a year or so, and we have made that money back. And hopefully you can invest in more Bitcoin mining or whatever you want. So it's something that we are continuing to look at in terms of all our potential options, but we will always take the longest approach to mining Bitcoin.
And it's also a good segue into talking a little bit about the miners that you've had in mind, the spread of what kind of miners you have purchased and what you're looking at.
It will be likely the S19 series models. And there are, opportunities to procure. I've had some orders already committed, and I already got some orders that we're trying to land in the next few weeks.
Awesome. Two questions that we can probably take together. This is going to be both of us chatting about it. Can we modify at any time if we receive dollar or Bitcoin? Can we split our payouts 50% Bitcoin, 50% USD?
Mm-hmm.
And is it okay if I take up that question?
Yeah, go ahead.
We would love to do that, right? We would love to do that. But we also want to be operationally aware. For TerraCell Blockchain Fund, 4 times out of 4 distributions, we had to delay the distributions by 3 or 4 days because 1 or 2 investors would have come and would not have given us their Bitcoin address or would not have set up their bank account. It becomes very difficult for us that it almost seems like Tozi is holding back investors' money because 1 or 2 investors, we cannot blame our investors, right? Because situations just changing every day. So yes, we want to give all kinds of flexibility to investors, but not to the point where if it's operationally complex for Tozi Capital, it's fine. But if it's operationally complex that it holds back our distribution to other investors, it becomes difficult. So, and I think our plan right now is to say either Bitcoin or USD. And within 6 months, see if the best of our minds, investors, we can get together to create some kind of easy pipeline where investors can very quickly choose if they want to switch back and forth. But operationally, with the size of investors, we will initially start with either Bitcoin or USD. Is that correct?
Yes, I will finally defer to my operations team. I'm very accommodating generally, but I know that it'll be easier for us and to deliver for all of our investors. So with that in mind, I would highlight that, just receiving your coin, your returns in Bitcoin does give you maximal flexibility as whatever step in terms of selling Bitcoin and then selling your cash, you could do the same in the same vein without any tax implications on your end. That's something that you should potentially look into. It would give you maximum flexibility in switching or doing 50-50 or dollar cost averaging, whatever you want.
Yeah, but for now, we'll start with a decision on either you will choose BTC or USD. As far as switching any time between dollar and BTC is concerned, we will try to achieve that, but we have to create a good pipeline where an investor can, before a particular day of the month, choose what they want to do. But as of now, we are not committing to that. Is that correct?
Yeah.
To switch, but we will definitely try. Nothing stops us other from operational complexity. Mm-hmm. And why invest in BTC mining as opposed to ETH, which supposedly has more users and is designed to be more programmable?
I agree with the second part. It is supposed to be more useful. I use it all the time. I buy NFTs. My team can't get me to stop talking about NFTs. We're launching an NFT project soon. Invite you guys to join that one. And I made $500,000 on selling my Bored Apes recently. Not sure if I said too early, but you gotta take profits where you can. And it's all on ETH. Smart contracts on ETH. Proof of work is the current operations of mining Bitcoin and Ethereum. That means you're using energy to solve mathematical problems, and you get rewarded through reminder fees and block rewards. Ethereum will be soon switching to proof of stake, which will nullify any investment or nullify the GPUs, the miners that you could get for Ethereum. I still think that Ethereum could have a longer run than Bitcoin, but Bitcoin is the granddaddy of them all in terms of assets. And what I would say is that there's lots of other coins that I like and bullish on, but I wouldn't necessarily pose that opportunity as an investment to you because I want to make sure that these are predictable in an unpredictable asset class investment with great yield.
Can you explain how depreciation recapture would work in the data mining fund? I think they mean the data center fund.
Yeah, so there won't be any depreciation recapture because there won't be a return. I'm sorry. There's a return of the depreciation in the beginning, and then you get your depreciation recapture once you sell. You redeem your shares. Apologize for that. I was referring to Bitcoin Mining Fund 4.
Yes.
So similar to all of our other investments. So just a delay on tax returns.
Yeah, depreciation recapture at the time of exit for the data center fund. And it's interesting that he used the word time of exit and redemption. Did we talk about that?
Yeah.
Okay, good. So it's a good question. When do we, because it looks like it's not clear, when do we get the initial investment back in the data center fund?
So that's a good question. It's when you are redeemed or exit. For most people, it'll be 3 years. So for a typical Tozi capital investment, and for this specific investment, if you invest $100,000, you get $1,000 a month for the first 3 years, and then receive your $100,000 back at the end of 3 years. Fixed returns, steady returns, predictable returns. So the base layer of just a strong data center investment. So it's at the end, your capital gets returned at the end. It's not a amortized investment like Bitcoin mining, where you get return of capital, or not return on capital, but it appears like return of capital within 12 months.
Just to set the stage, we are at the top of the hour. Thank you so much, everyone, for joining. You will get a link to this recording. You will also get a link to the offering page. So definitely, if somebody's short of time, thank you so much for joining, but we are going to continue and answer the 75 remaining questions. Okay, so what's the price per kilowatt you're able to get?
The raw power is sub 5 cents, but the all-in with rent and costs and hosting and technical staff is how we describe the industry, is a little bit higher than 5 of those, around 5.2. And some sites we have 5 cents. On other sites, we're looking at 5.9 cents. It's very profitable now, and the market rate for getting on spot miners in hosting is typically around 8 to 9 cents if you're trying to find something now. That's why we plan ahead well in advance to deploy this data center portion of the investment.
I see this question being upvoted again, so maybe some people missed it. Can you give a quick update on Fund 3? What's happening with the miners and the timing of start of operation?
So we are, the miners are being modded right now to get into immersion. Some of them are going to be deployed in the next few weeks, but most of them will be deployed along the schedule that we plan, which is December and January, and then providing investors that return potentially, most likely in February, but potentially partly in January.
You mentioned year 1, you can depreciate 90% of the investment basis. What happens year 2 and beyond? Would the cash flow be considered as capital gains?
Cash flow is considered as ordinary passive income. Any sale of your Bitcoin is considered capital gains. It's like if you were receiving RSUs, if you're lucky enough to have being a company that does that, you get shares of Apple, for example, every quarter or every 6 months, and that's income. And then when you sell that, even a day later, whenever, it's capital gains.
Investors, if you can just help us upvote the questions, because we have 72 of them remaining, that'll really help us. And also let us know if our process of upvoting the questions and answering the questions first, which have got the top votes, is useful. This is something new that we are trying this time. And how many Bitcoins can each site mine every day? Oh,
that's a function of the input of terahash. So given the size, the projected size of Bitcoin Mining Fund 4, which is 50 million, I haven't mentioned that, we would be looking at a close to, I believe it's 76 gross coins a month. So that's 76 Bitcoin a month in the first month, and that will gradually decrease over time as difficulty increases. So if difficulty increases by 8%, it will make 8% less from the last month.
Interesting question. Can you explain the exact business model of the data center income fund in further detail?
Mhm.
Focusing on the downside risk, 12% annualized is great. I agree, 12% is great. What are the scenarios in which this cannot be made?
So with any investment, it's still an investment. It's still in an asset class category that it's in a new emerging asset class, which is Bitcoin mining. But we go and host our machines with Compute North in Nebraska, for example, in Fund 1, and we pay a premium on that. The data center's portion of that investment for whoever owns that data center, not us in that case, charges that premium spread of power to what they paid in power. And that constitutes that spread on return for their essentially triple net lease. So we sign a 3-year contract with Compute North in that first fund, and that return essentially how that 12% gets paid. For the so what was the second part of the question?
Let me just quickly. No, it was purely about. I'm focusing on something else as well. Let's go to the next question, and I'll come back to this. Okay.
Okay. Sorry. One last thing. So with all our Bitcoin miners, when we get hosted on the site, if we don't pay a power, if we don't pay, which right now is 85% profit margin, that means we would have that Bitcoin has to go down a lot. They could confiscate our miners. So that is definitely the worst case scenario. But we will be building a healthy buffer to pay that pref equity. Almost in every scenario, Tozi Capital has paid its pref equity because it doesn't matter if you don't have rent or whatnot or an income. You still have to pay your mortgage. If you own a house, you still got to pay your mortgage. So we treat pref equity similarly.
Just wanted to highlight a couple of things to new potential investors. I think a couple of people have messaged me. We sent you the offering details link. You can, in order to look at the details, you have to sign up in the portal. There's no cost to signing up in the portal. So feel free to just sign up and you'll be able to see the details. So signing up is just a few clicks and a few questions so that you can be part of the portal. There's no cost or anything involved. You're not locked into the investment if you sign. And what's the total size of the raise? I mean, what's the total size of each raise? Right, there are 2 funds here.
Total size would be 50 million.
Okay, it's 40 million for the Bitcoin mining fund 4 and 10 million for the data center income fund, right?
Yes.
Okay, awesome. What happens if the state that you decide to mine in decides to ban miners due to energy shortage?
It's something that I would be more concerned with outside America for sure. It's something that I want to make sure that we have lots of distributions of locations so we could always pick them up and move. But we are targeting states that have a very high need for revenue generated through their, in Ohio, for example, it's an ex-GM plant. It hasn't been in operations for a few years. It was created ball bearings during the World War II. I visited a couple months ago, and I really like the fact that we can bring life to a facility that is now not being used for its intended purposes, but it has lots of power, and we still need to consume that power. But that power is not being used or leveraged by anyone. Rust Belt states across America have lots of power, and they're not being used because factories no longer are existent here. In Texas, for example, we're working with renewable energy and just creating a lot of energy in those markets. Oftentimes we work in deregulated markets as well, although we are always in tune with what's going on with the local regulations. In general, states we're working with, states we're in, have been embracing Bitcoin mining and actually crafted some special tax incentives, which we're exploring for further developments.
And if I can add just another data point, I don't want to get into trouble for saying this. It actually makes it interesting to search and read about who is actually investing in Bitcoin mining in the United States. What are the profiles of people? It'll be very interesting to see. There are lots of people who control what the questions that you asked about are themselves directly involved in Bitcoin mining. So that speaks a lot about whether we will face this problem or not. And I will leave it at that.
I want to just highlight, I was talking to a local state senator in my last trip a few days ago in Kentucky, where he's a part owner of the Bitcoin mining farm that I am partnering with him on, and we're actually talking a few days from now for further expansion. We have lots of advocates in this space. We can bring an interesting new solution to unused power, and for folks who believe that the central government is, printing too much money, this is interesting. For folks who believe that Bitcoin mining can be an alternative source for interesting new ways to leverage energy, and usually it's unspent energy because we're really close to the transmission line. Energy produced and that's not consumed is unspent and wasted. We're typically, Bitcoin mining generally is typically using unspent energy or being as close as and efficient as possible, because we have to be efficient. That's the name of the game for Bitcoin mining. We're not inefficient. We're trying to be as efficient as possible. And I would be interested to see in the next few years what technologies arise from this economic endeavor of trying to be as energy efficient as possible, which will likely tie to renewable energy.
I was waiting for this question and it came. Which has better tax efficiency, the PEC fund or the data center fund? Both have the same returns.
It's a great question. I don't think I have that answer, because on this time scale of 1 year, you actually get paid long-term capital gains because of the way we're structuring PEC fund. We're structuring PEC fund as a qualified dividend. It's to a K1, that 15% tax rate, 15 to 20%, depends on your income bracket. Data center income fund, you're essentially getting a tax deferred income throughout the whole time. And then you get, like all other investments in this space, is recaptured, but that gets transformed at a 25% tax rate. So it depends on the length. I believe at 3 years, it's very much more tax efficient to invest in the data center income fund, very similar to our senior living income fund. I'm very clever in my names, guys. Bitcoin mining fund 4, data center income fund, one of hopefully self-explanatory.
Once we invest, I think this question will come back again and again. Once we invest, how long before the first mining returns start?
I'm planning to be in operations end of Q1 or early Q2, meaning March, April. That's the most realistic timeline. Now, we could strike earlier, but given long lead times of transformers and everything else, and potentially the more economical basis of buying miners for futures, essentially a future order, because you get a slight discount for the spot orders, I would make that judgment call there. But that means that usually right after we start mining Bitcoin, the next month after we send Bitcoin to the investor.
Yeah, and I have done my research as an investor as well. I don't think there is any other operation out there that can commit to a March, early April delivery. It's also because of Eng's contact with Bitmain and other folks. That's my personal opinion.
I know there's investors who invested in a Bitcoin mining fund, a very large one last year, that's doing well, but they have not paid. They have not been in operations. They just got miners at a very good strike price. This is like buying Bitcoin early. And that could happen to us. We're buying miners now, but I am trying to get yield producing assets to yield to you guys as fast as possible. It's not like buying a red blockchain stock and seeing your money go in cash in hand, although some of the money to trade the stock, and then never seeing Bitcoin. I want to give you guys Bitcoin. That's the output of Bitcoin mining.
And it also helps that Eng decided to do it in small batches, right? That way, get one, complete that fund, make sure those investors are happy. We won't lie about the fact that a month back, Teracell Blockchain Fund 2 investors were a little bit on the edge with what's happening with all the supply chain issues. But come December 11th, they would be getting their full quota of distribution. So it's better to take it in small batches and commit to a date and get there as quickly as possible. And how much dollars of equipment are you buying for Bitcoin Mining Fund 4? Is it going to be a one-time purchase, or will you keep making purchases in small batches?
Uh, it will be mostly one time, but also in small batches. So, but mostly upfront as soon as we get capital. We'll take some advantages of some good contracts we have, some good orders, advanced orders we have that we secured. But in general, we do want to have some diversified distribution network so that we can get our miners safely to us. And then getting our capital deployed as fast as possible, but as opportunistically possible. Opportunistically means that I kind of hope Bitcoin does not go up in price the next few weeks as we're starting to get capital. I want Bitcoin, I like to mine at the dip, essentially buying Bitcoin or miners when Bitcoin price isn't too high. That doesn't mean that Bitcoin going up is a bad thing. That means that we actually all make more money. It's just that it will probably have a slight effect on Bitcoin mining price.
Is the site going to use liquid immersion miners?
So it's very efficient to use liquid immersion, but it's very capital intensive. And it's not necessary in the Ohio site. So we're doing air cooled in very cold temperatures. But in the Texas site, which isn't finalized yet, but that's something that we're working on and will likely have, will be all immersion cooling because it's Texas, it's very hot.
Awesome. This is about the data center income fund. How much is the depreciation in year one?
It is 100% your capital.
We still have 75 questions, so please help us with upvoting the questions. And I think investors have reached out to me saying, yeah, they like the upvoting. So if a question is not upvoted, please, even if it was asked much early, we will get to it. But in the interest of time for other investors, we'll just take the higher upvoted questions. And oh my God, the question just switched on me. Who is running the mining operations?
So we do have some partners that we will be relying on. One of them is Lightspeed, that will be in Sandusky site. Their business model is developing enterprise data centers. It's actually a much more profitable business model for them because they have strong connections locally with hospitals and other folks that need small data centers developed. And it's actually very profitable in that space, but it's very highly operationally complex. And Bitcoin mining is actually less profitable on a power consumption basis and investment basis. It's just that it's less operationally complex. It's more scalable, which is why we're doing Bitcoin mining. So for us in Sandusky site, we are partnering with Lightspeed. And I talk to the CEO every day, and he's hosting many other miners, tens of thousands of other miners. So he has a very strong technical background and his team in hosting miners.
This was actually a follow-up to what you had mentioned. You had mentioned a blocker entity. Was this blocker entity used in your previous funds too?
Yeah, we use the same structure in all funds.
Can you share more about your decision regarding Ohio versus Texas? Is solar power not more efficient in Texas?
Solar is efficient, yes, but in a congested production phase, which is where we are. Right? What we have here in Texas is potentially too much power production, but it's also variable because solar is not on night. You want to be running 24/7. You have nuclear in Ohio. To be fair, we're not plugging into either plant directly to get power. We're not relying on 100% of those power sources. We're still relying on the grid, which is leveraging those power sources as the closest transmission line of power production. But I always wanted plan B, C, and D, and plan B could be better than plan A. I also want potential lots of options, and that's why we've had so many different sites and scaled up, and we learned from each one. And there's immersion cooling. We can't wait to announce that potential partnership in the next few weeks.
I'm just trying to opportunistically answer a few questions using text. Regarding tax depreciation, with regards to Fund 4, would tax depreciation come into effect only when the miners are operational, or do they come in if you've bought the miners?
Yeah, once they're operational.
I have already invested in multiple Tozi funds so far. Am I investing all my eggs in single basket? Thoughts?
That's a fair question. I had a investor tell me one of my favorite comments. He was always stressed about picking investments and trying to figure out what to do with his money. Right? As a person who earns money and has disposable income, you should work to make sure that your money makes money for you. And it's not passive when you have to look at so many different things. You have to vet out sponsors. You gotta like gain that trust and that tracker. What he told me is that all he does, he's an Apple employee, is invest in Apple and or keep his Apple shares and invest in Tozi deals because we have diversification. I'm an investor. I'm an investor first. I like to look at investments. I try to make money as diversified as possible. We have other investments that I have as well that we potentially might be offering in the near future. But they're all kind of things that I believe are strong yield producing assets. Yes, there is a bit of a all eggs in one basket in me. And that's why we're growing the team. And that's why we have scalable operations that we're building over time. So that it's not, so I'm not a bottleneck. And I'm very conscious of that. Thank you, Shiv, for helping me there on lots of matters. And we're looking for definitely talented people to join investment-minded people, right? We're investor first investment company. That means I'm investing with you. We're thinking of all these potential good investments for you. We're betting them out. And oftentimes you're not seeing all the other investments that we have betted out and we didn't necessarily think was to par for our Tozi investors.
This is a toughie, right? What is the projected number of Bitcoins net to passive investor if the investment is 100K over 5 years? Okay, you can take a crystal ball and start answering.
It's in the model. So let me just like pull that up real quick. And the net to investors in 100K is around 1.94, given a realistic price target. So 1.94 Bitcoin, Bitcoin mine. So the discount on the investment.
Definitely look at the model. The model is shared with you. So I request the investors to take a look at the spreadsheet that has the model as well. And the model is part of the offering page.
Yes.
So in the attached documents in the offering page, you'll be able to download the model. Please feel free to look at it and get back to us if you think we could model it better or if you have any suggestions for improvement as well. How does the depreciation work if we don't sell Bitcoin? Technically, there's no income at all, right, to offset?
There is income when we mine Bitcoin. The price of mined Bitcoin is what we produce in income. The appreciation is the property. So, that does get passed to you, and that doesn't, if it doesn't get sold, then you've never paid taxes on it. You could leverage it. Great way to get some equity out and still capitalize on your assets. But yeah, it is still an income because we're mining Bitcoin. That's an act of producing income at the current valuation of mined Bitcoin.
It's an interesting question. I'll read it as it is written. This is knowingly a naive question. But what are the factors in play that result in a similar projected yield percentage in Fund 3? That is roughly 1/5 the size.
I'll be honest. There is a lot of trying to make sure that the model accurately predicts difficulty. But I cannot predict price. I cannot predict the price variation. The fact is, this fund starts at a slightly higher potential Bitcoin price. That's what has happened. We're keeping our cost basis on mining very similar. We're keeping our scale very similar. But if price goes up too much also, then it might be more expensive to buy miners. Overall, we have a healthy spread. We have an 80 to 85% profit margin. And given the structure of the fund, most investors will receive most of their money, if not all the money, within a year. That should be the same for all 4 funds.
And what are the fees here? How does Tozi get paid?
We get a profit share after we giving you money back, and we're sharing on that hard work that we've invested. The same thing I do with almost all my investments. Same thing I do with the data center income fund. There is a little bit more than 12%, potentially a little bit more, but that safety margin for you, the investor, giving you the money first, allows us to de-risk you slightly, or de-risk you and put the risk on me. And I'm betting on the investment and betting on making money. And that's how I generally make money, or Tozi Capital makes money. And so usually we're waiting for returns to happen. And for our first fund, we do get paid 10% of the profits on the mined Bitcoin during the return on investment period. That does go towards paying a lot of operational expenses, but that allows us to maintain some of our salaries as well.
And what's the deadline to buy into each of these funds?
Deadline is the end of the year, December 31st. We'll likely notify everybody when we're closer to filling up. I believe it will likely happen before the end of the year, but as always, we try to accommodate. I don't want to rush anybody. Just let us know, talk to us, and this always, we want to make sure that we prioritize people who do invest early, and that's why we do have that 6% provided to investors.
Are you buying Antminer S19 XP? It is the next generation and much more efficient. I love it when investors actually come and suggest what we should be doing. Thank you so much. We're always exploring it.
It's something I'm considering strongly. I have placed an order, but haven't fully capitalized on it yet. So the way that most of these miner purchase order works with Bitmain, and we're doing it directly with Bitmain, you place 35% of your capital down now, today, and you receive this miner, which has 140 terahash and is more energy efficient by a lot than the current generation miner, but is priced at $75 and $80, and you only get it over 6 months. Every month that you're not mining Bitcoin, that your capital is in work and not being deployed and mining Bitcoin, is 9–10% that you're missing out on. So there's always an equation of making sure that we make money now so we can recapitalize and give investors funds fast. That's why I'm always trying to prioritize that, versus making the long tail economic decision, where if we were a public company like Riot, we would probably make these longer tail investments that in actuality, they don't actually make that much sense. They're paying maybe a slight discount on a future order that's 12 months from now, but you're missing out on 6 months of mining, which could get you 40–50% discount on your money because you've made that much money within that time period. So for this fund, I don't think we'll be incorporating. It would be too long of a wait. It would be deployed over 6 months and the tail end of Q2 and of 2022. And given Bitmain's track record of delivering, that was, as best case scenario, likely it would be starting, if we were doing this kind of order, would be for our next iteration or subsequent iteration of funds.
I just want to jump the gun and ask a question which was not upvoted, but it was I think it's very important. Why should we invest in this fund with such a sponsor-friendly return split when we could invest in public BTC mining stocks that trade at less than 10x 2022 forecasted EBIT, with several trading around 5K?
Yeah, it's a good question. The first part is like, it's sponsor friendly relative to real estate. Potentially, I think the returns are very nice still. It's still very favorable for investor. The alternative question would be, why do AIM raise money from investors and not just go public markets and go public? I have been approached to do that. I could get cheaper cost of capital. I could actually retain more profits. These are all things that, that's why most Bitcoin mining companies go public, and they will have cash in hand. Riot Blockchain, reading the last quarterly earnings, has $140 million or something like that, maybe like 50, 70, and then cash in hand. They'll keep using it to buy Bitcoin miners, but they're not right now. Why are they not? Why aren't they being as capital efficient as possible? Why is their mining revenue has improved, but has improved from 70% to 76%? Why is mine 85%? because we're running lean. We don't have corporate overhead. We don't have those structures, and we're trying to deploy our returns back to you investors first as soon as possible in the form of Bitcoin. It's a yield producing asset. If you want to invest in venture and equity, I think it's a different structure altogether. I wouldn't say that that's not a bad thing. You definitely look into both. But I like yield producing assets.
Given there are a limited number of Bitcoins overall, the cost of mining will continue to increase. The faster miners will be having a distinct advantage. Your projections are based on current mining cost and the latest price of miners. Assuming the cost of mining significantly increases, how do you still see this as a profitable investment in the future?
Well, that's why we're trying to give investors return capital first. And if it's less profitable over time, then I just don't make so much money, which is putting a lot of time and effort and capital into play. But overall, we believe right now Bitcoin mining is very profitable, and it could change in 2 years. And we might not want to deploy capital in 2 years, but within those 2 years, we would have made our money back and then some, and profits over time. And if you held onto Bitcoin, like I'm planning to, that could appreciate as well. So yes, Bitcoin mining is right now a gold rush. We got in very early. We got in lucky when the China ban happened and half the global hash rate left. And so we were able to capitalize on that. Hash rate has recovered significantly, hasn't recovered yet to those levels. I know many Chinese partners who are still looking for hosts in space, but infrastructure is a bottleneck, which is what we've been trying to solve for. Overall, Bitcoin mining is not, it's a hard thing to forecast because so much variability with the price. What you can try to do is, can I get my money back as soon as possible? And if you're looking at Bitcoin price going at 40K or 50K, or sorry, 40K, you're making probably 7%, 7.5% return, monthly returns, maybe 6.5%, depending on difficulty. And so your return on capital won't be 12 months, it will be 16 to 18 months. So take a little longer to return capital, but that's to return your capital, then to profit and to compound your growth, and potentially hold a bunch of Bitcoin, because you might as well get more Bitcoin than buying Bitcoin.
And we're down to the last 59 questions.
Oh,
all of them don't have all of them don't have an upvote. So I'll just quickly go through the questions, see what could be the most pertinent and value add, and then ask that. Can the distributions be done annually instead of quarterly, if that helps avoid short-term capital gains? As of now, the distributions are monthly, not quarterly. The question is, can it be done annually?
It's not going to help capital gains specifically because you get taxed on the mined Bitcoin at ordinary income, and then the sold Bitcoin is where you take the appreciation hit. And because we're mining it, selling it within the amount of days, just limited capital gains portion of that. You holding it on longer or keep taking Bitcoin monthly or yearly doesn't change your capital gain structure.
Awesome. Is there a projection on timeline for network difficulty increasing to the point where the miners are no longer profitable?
Yes, it depends on Bitcoin price. If Bitcoin price stays flat and difficulty increases at this current rate, then it will probably be closer to 4 to 5 years that it becomes unprofitable. But that's also unrealistic because difficulty, if price stays flat for so long, more investors, more capital, more public companies won't be investing in Bitcoin mining because everybody wants to make money. And so that equation is always forefront when people are making purchase and procurement decisions, which will affect how much Bitcoin miners are produced and how the difficulty and competition increases or stays flat over time.
Thanks, Nick. The model says you get 1.99 Bitcoins over 5 years. Bitcoin is 56K today, $56K today. So for 100K, we can just buy 1.99 BTC today instead of mining it over 5 years.
That's a fair point. I'm not sure that math is accurate on that side, but I think my equation is factoring the fact that we're mining in a few months, yes. But over time, this Bitcoin does increase over time. And while if you see a dip in Bitcoin price, that might be a good time to buy Bitcoin. But overall, you should be getting more Bitcoin as a multiple. And I think that's evident by sort of, when Bitcoin goes down or Bitcoin goes up, that changes how our profit margins look. That means changes how much net Bitcoin does get sent to investors. But overall, it should be a positive thing. And at current rates, it'd be 1.5 or 1.45.
Is Hoshi still involved in Bitcoin mining 4?
He's still involved in our first 2 funds and a consultant in our fourth fund. We're potentially launching DeFi protocol next.
Let's not get into that now. Okay. Sources and users, an investor wants to know for the mining fund 4, how will the 40 million be used?
It'll be used towards 90% likely towards miners, and then likely 5% towards shipping, and 5% towards setup and energy advance payments. So usually you took 2-month deposit on energy. And that's been our experience with the previous 3 funds.
Okay, I think we answered that. For the data centers, will there be any non-miners as customers?
So there won't be any non-miners as customers. We're developing tier 0 data centers. Essentially, these are the most basic and bare bones data centers. In order to go up to scale on data centers, we need to put in a little more infrastructure. But that is potentially configurable. That's not what our plan is right now, as there's still a very healthy appetite for hosting space and data centers.
If we take BTC as distribution, will that be taxable, unlike receiving it in USD?
It'll be the same tax treatment, whether you take a BTC in distributions or cash. If you took 2 investors that took cash or BTC, the K1s that we provide you will be the same.
I'm just going through the questions to see what we haven't answered. Will this new fund combine and work with other pools, or will it operate independently?
We'll combine and work with pools. Foundry as our target pool, although we're also evaluating other pools that have stronger audits. Over time, as our hash rate grows, we will independently look at combining all of our hash rate into one pool that we manage ourselves. This will reduce our fees, upfront pool fees. But of course, we want to come to a certain scale before doing that, because then that scale allows us to have predictable number of Bitcoin mines or block rewards.
So I think we still have 96 investors online. So an investor probably asked this early. So the investment will return by earning both BTC via mining and 12% on the real estate component of data center. Is that correct? They are 2 independent funds.
The 2 independent funds, one is safer, more predictable. It's with the base layer. You got to pay that. Doesn't matter if Bitcoin price goes up and down. If it goes down, it just becomes a higher portion of the variable cost for the Bitcoin miner. The other one has the upside and has that very healthy potential return, and you will be getting it in Bitcoin. The data center income fund is all cash. It's a traditional income fund on Tozi Capital, very similar to everything else we've done.
I'm just also answering a few questions. Can you please clarify the relationship with Foundry again?
Foundry and me?
Yes.
We're a client of theirs.
Who are the sellers of the miners, and what is their motivation for selling? Their business.
It depends on who we're selling it. In the past, we've had resellers, and sometimes the resellers are cheaper than buying direct. Sometimes we're buying direct, but then sometimes the direct sellers, meaning that Bitmain themselves don't have any in stock. So we want to be optimistic. Generally, who's going to be selling these Bitcoin miners? People who have too much Bitcoin miners ordered have too much Bitcoin miners that don't have enough space, or are potentially not in U.S. companies, and they want to offload their miners that they can't mine in their country, typically China.
What is the risk in this investment? Is my principal safe? Is my principal safe?
No investment should be seen as safe or risks off. That's why it's an investment. And I can get these type of returns on non-investment. Your principal is going to be return as soon as possible, and our target is 12 months. If it stays flat, it'll take 18 to 20 months. But it's not safe, it's not guaranteed, but we're trying to return that as fast as possible.
What sort of risks are there to the host site miners from natural disasters, acts of God?
We do have insurance and on the miners themselves, and we will have and then our hosts will have insurance themselves. But we also like the fact that these, especially the Sandusky site, Ohio site, has existed for a long time, and that we are repairing it to maintain its integrity. I don't believe it's a strong risk at all, and we have insurance for any potential risk.
And are you seeing Bitcoin more as an investment vehicle, or are you seeing it as currency?
I see it as a store of value and also an interesting technological math asset class. It's digital gold for me, and my parents used to own a jewelry store. They bought and sold gold. I remember it's very interesting times, and it's something that I think will be seen as a store of value. I don't necessarily see it as currency because I think it's not as widely adopted right now, although PayPal and Venmo will be leveraging it on their networks to potentially use as currency. But there are lots of other coins that are maybe even better currencies, as Bitcoin is specifically tailored as a finite asset with 21 million Bitcoin, 19 million have been mined. At a certain point, you don't really want to sell an appreciating asset.
How often do you have to replace the miners?
We're not replacing the miners. We're usually replacing any spare parts that blows out. It's usually from overheating. And you have a heat wave, you might have more spare parts that blow out. Usually it's the PSUs, fans, or motherboards. But we have those on hand typically. If anything goes wrong that is beyond that, we do have a 1-year warranty, as these typically are new miners, and we can send them. But that's not ideal because that takes the miners out of commission for 2-3 months. Sometimes I see something's 4. It's 4 months of not hashing, not making money.
For the data center fund, when it comes to withdrawal, do we have to choose the term 1 versus 3 years right now, or can we choose that as time goes on?
You can choose that as time goes on.
Yeah, but you'll have to let us know 90 days in advance. That's
yes,
about it.
Let us know.
In that year, that's about it. It's not like you just come and say, I need it tomorrow, because you have to take care of accounting. But absolutely, take your time for that. Is data center fund distribution qualified dividend like PEC? I think we answered it before.
No, it's ordinary income like other real estate investments.
Give me 1 second. Will the data center fund own the data center, or will it lease it from someone and then lease again to the fund?
It will lease it from someone and lease it to Bitcoin miners. It's a significant shell that we don't necessarily think it would be capital efficient to own, given the fact that Sandusky is 1.2 million square foot. You don't need to occupy all of it. That could be subleased to other tenants. But we do, in our contract writing, a option, a first right of refusal to purchase in the case that becomes a good investment to make.
If mining goes well, will 50K still only buy you a fixed amount of 1.5 BTC, or will investors get any of the upside?
If mining goes well,
will 50K, according to the model, still give me only 1.5 BTC, or will investors get any of the upside? Well, the upside is in the price of the Bitcoins that you got early and the price going up, right?
Yeah, I think And there's two parts to this question. One is, do you want, you will get more Bitcoin than buying Bitcoin if you might, that's Bitcoin mining. Second part is, if Bitcoin mining goes well, how does it go well? It means that our miners last longer than 5 years. That could be the case. And in some cases, you have old generation miners that are 6 years old that are coming online in this past 12 months, and they're profitable and they mine Bitcoin. As long as that potentially happens, the price appreciates, we could mine Bitcoin beyond that, and you could get more Bitcoin. This is modeled on 5 years, but it could go up more over time and doesn't have the halving price increase as typically that happens.
How can you have depreciation for the data center fund in 2021, but for the mining fund, you have it in 2022?
That's a good question. And it's a question I do need to clarify with our accountants. But we've already deployed some of these assets into some equipment. And as long as we create a sublease and then have an initial payment of the first month's rent in any form, that's a yield boosting asset.
Okay. What happens if there is an accident at the Bitcoin mining facility? Would the investors be liable for anything?
No, there's no liability. So you're investing in an LLC that is its own special purpose vehicle to just be investing in an operating company. So there's 2 layers of liability protection, and there's also insurance within that, just like all the other investments.
Let me see what. I think most of the others are repeat questions as I look at it. And do you want to just take a 30-second break and also just a 15-second break and also browse the questions? That way you also get a breather.
Yeah, okay.
We answered that.
Someone on the chat says we prepare FAQ. Yes, we actually have an FAQ, so we'll upload that tonight as well. Please let me know about if compounding Bitcoin is ready, please. Thanks. So there's just certain pools that actually allow you to earn yield on your Bitcoin, mine Bitcoin. It's not high, it's like 3 to 4%. You can also invest, wrap your Bitcoin and stake it. That transforms to Bitcoin, and then you can earn yield on it. It's also low single digits. But what we did with Fund 1 was to allow investors to compound it, meaning that their return distributions get to be invested into the next fund, and now they have a bigger cost basis. Operationally, that was very complex. I'm mindful of the fact that some investors don't really care about the yield specifically. They want growth, and Bitcoin is about growth. So in the future, there could be a scenario where there's a fund that then all these regions go into, that then would then keep investing and just be in a sort of a equity growth play alongside multiple series of subsequent funds, and grow and grow and keep investing and being as capital efficient and with deployment as possible. With no promises.
You noted mining Bitcoin gets us 1.5 BTC. These are all different variations of the same question. That'll get us 1.5 BTC for the same cost as buying Bitcoin. Can you explain the math here? Because if the cost to produce is 10K and today's value is 56K, how does the math work?
So there are 2 parts of that. One is 10K is the ongoing operational costs. Now, a significant portion of the cost, of course, is the capital, is the hardware. If you can get cheaper hardware, then cost goes down, but that's not inclusive of the 10K. So your break-even price is actually around 22, 25K. Depends on difficulty and all that stuff. That's inclusive of your initial investment. Still pretty healthy return. And the other part is, I believe, when you're, it's the profit share that we do. So we do mine more than 1.5 Bitcoin, and for us to scale and that and allow us to have these pass-through costs. That's how we're setting up this investment.
Let's say I invest in the data center fund and I redeem. Can I 1031 my proceeds from the redemption?
So we're not going to be doing a tick 1031 option for our data center income fund. it would be a bit too hard to coordinate at such a short notice. We do have other 1031 exchange options in the future. Let us know if that's something you're interested in. Always happy to accommodate.
So, for the data center fund, I think you said accrual starts next month. When can we expect ACH funds to hit our bank accounts? So let's say you fund in December. Your accrual starts in January, right? But I'm so far, am I right? And accrual starts in January. You will start getting your 1% from the month we start operations. But till then, whatever accrual, the 6% accrual is there, that will happen by the end of your first year.
Mm-hmm.
For any questions, definitely reach out to Ryan. We'll make sure we give you examples and we explain that to you as well.
And by the way, sorry to interrupt. These investment returns do not include any of these accruals or these bonus
yes, that's correct.
Distributions. That's coming out of our own pockets. Of course, we're getting that from the investment itself, but that's then added to your investment. It's not included. So to be a little bit higher.
What are your thoughts on big economies like China and now potentially India banning Bitcoins and the impact on its future value? I don't think India has banned Bitcoins, but it's a larger discussion. And I would love to hear your thoughts.
Well, China has banned crypto. They want centralized control of things. The US government wants as well. They won't potentially ban Bitcoin, but they will compete against Bitcoin or some kind of version of a crypto asset. They know that blockchain and cryptocurrencies are a much more efficient way to transact in this economy and to track things and to have centralized control, especially you can control the code. It's a much more solid foundation to build an economy. This is why Facebook changed the name to Meta, and that's why lots of tech companies are going and exploring blockchain applications, and why the future product will be NFTs, I believe. China and India banning Bitcoin or any large will just potentially further instigate sort of this concept that you can't, having Bitcoin in your wallet, your hardware wallet, your personal wallet, is the only safe form of preserving your capital. If you can hold that on, and you can't have any central authority have an impact, that actually creates a better perceived value. Overall, I do think that it might limit further adoption, but the adoption of Bitcoin specifically isn't that high. It's less than 0.01% worldwide, even further than that. So I think there's so much opportunity to adopt, even if just America and Europe further adopted Bitcoin.
So, do you have a long-term lock on energy rates? And can you talk a little bit about the energy sources that you're using?
Yes, so our Sandusky site is with the local energy provider, but it's with essentially within a few miles is a nuclear power plant. And so our energy is mostly sourced from nuclear, though it's still grid energy. And we will have a right to buy the substation, which will allow us to have a locked-in power rate. It's a standard rate we have negotiated. It will step down over time as we actually consume more power, and we prove to them that we consume more power. And in Texas, it's a locked-in 10-year rate, although that's at the land lease level and the data center level.
There's a question which asks, for mining, are all funds sharing the same data center and ops team? What about the miners?
The data center ops team, well, there's two parts of it. Just think of it like real estate. There's a property manager and there's an asset manager. Cozy Capital is the asset manager. We work with Foundry and other wider net partners to then facilitate the fund management. They're property managers, essentially, that are on site, like Elite Mining or Compute North or Lightspeed, or a private miner that has great power that are our local technical staff, that they're localized to the region, localized to the area. They don't generally fly in between. We do enlist consultants from time to time. In Blockyard, for example, they help set up and configure data centers. They will be a consultant on this project.
When you predict returns given the 3 BTC scenarios, you gave the 3 scenarios, were those just straight line paths or were they Monte Carlo simulated?
It was just straight line paths. And so was the difficulty straight line paths. Actually, it's a little bit of a geometric downward curve. I will admit this is not as sophisticated as I would like, but I will say that it is much more sophisticated than almost every model that I've seen.
Let me just see. Most of them are repeat questions. Mm-hmm. This is their projection of time frame, and then I'm not understanding this question, but maybe you will, and maybe it's very pertinent. Is the data center supporting or for deployment of full nodes or any type of nodes? Can the data center support any kind of nodes? I think that's the question.
The data center can support any kind of computers, servers that need data and fiber optic line and a cheap cost. They are structured and configured to mainly scale for Bitcoin miners, ASIC miners, but they can be reconfigured for a variety of different things. It would cost a little bit more to deploy for enterprise data centers. I believe, Shiv, you have some experience with Facebook data centers. It's very costly and very specialized in expertise. What we're doing is a little bit less sophisticated, but we do have other potential options, although it's not our primary priority, as we could have a lot of other Bitcoin miners be essentially subleasing from us.
I think so many people ask questions about the models and what is the predicted amount of Bitcoins. So there's an interesting take where an investor asks, I'm curious if the answer to all the variations of the questions about being able to buy a roughly equivalent amount as would be mined in 2 years, is your answer simply, we still continue to mine and create profits, so it far exceeds buy and hold BTC? Would that be your simple answer?
I think in 2016, there were around there, Bitcoin mining was actually not very profitable. It actually was not profitable at all. You spent more money on power. The chips weren't as efficient. The answer yes to that question, but the simple answer is it's still a great investment. It's kind of it's sort of like a dollar cost averaging of buying Bitcoin over 5+ years, because we're mining Bitcoin the whole time. If Bitcoin goes to 35K, we're mining it. If it goes to 100K, we're mining it. If it goes to 500K, we're mining it. If it goes to 1 million, we're mining it. We're getting Bitcoin. And you take advantage of that appreciation. You take advantage of the fact that we're connected to the network and we're mining Bitcoin. So it does help protect from that upside. If you think of it as a protection in terms of a price protection, you're locking in a hash rate, or at least a predictable hash rate that will have less over time and produce less Bitcoin over time. But you're locking in production for a long time.
Thank you. I probably should have got to this question before, but it's nice to conclude on these notes as well. An investor asked, didn't quite understand how these two investments are combined, the income fund and the mining fund. Can you explain this once more?
So they're not combined, although represented the same webinar, because they are intricately aligned. The last few months, I have been focusing not on acquiring miners, not on developing Bitcoin miners or developing better software around that. That is something that we do have partners doing, but we are been focusing on infrastructure. Infrastructure and hosting space has been the bottleneck that has plagued the industry because China banned Bitcoin and everybody wanted to get Bitcoin miners in America where they see safe harbor and a very predictable future with favorable regulations coming potentially. And so with that in mind, like the fund is about developing the data center space, and it actually could take in more miners than the income fund could take more miners than the fund could actually build. And so we're essentially subleasing it or paying, having a cheaper cost of power and passing it on as a contract to the Bitcoin mining fund. So essentially just taking sort of a total capitalization that you would have in most Bitcoin mining funds and splitting it into two parts. One that gets you a very predictable, safer 1% yield, 12% yield on your investment, and one that has that actually higher potential, but still paying market rate on power. It's a little bit better than market rate on power.
18 more questions. I think we should be able to take care of that in 15 minutes. Thanks for your patience, everyone. If I elect to get Bitcoin in the mining fund, how would the K1 look like? Let's take that first. What will my K1 look like?
If you'd like to get Bitcoin in your mining fund, it will look like almost every other K1. It will be a profit and loss. We will have a cost basis for when we mine the Bitcoin that we pass along to the investor. And so that cost basis is essentially our earned income. It's earned, it's created, that's came from the blockchain as a block reward and transaction fees, and that it's the cost basis.
Do you have a redacted K1 that you can share? A K1 with blackouts that we can share?
Not for Bitcoin mining,
Yes.
because we only started this year. And to be fair, almost everyone has started this year and scaled up next year. But I think if you look at any K1, you can Google any K1. That should be very similar to all of our. It should be very simple. A CPA or a tax software should not be able to distinguish this as a Bitcoin mining fund. It's just a yield producing asset that has income, profits and loss. That's everything that is essentially any real estate investment. It's all the same. There's no line item for, say, depreciation that gets created at the partnership level, and then that passed through to the investor in that line item. We file taxes at the partnership level and then send the K1s to the investor as well.
Does Bitcoin Mining Fund 4 use nuclear power?
Yeah, part of it does.
I think we answered this. Do you expect chip shortage to affect production of the miner rigs? If so, is this reflected in the projections on the current model as well?
No, almost every miner we're going to be purchasing will have already been built. Any new miners that you're looking to purchase that will have chip shortage issues will come online for probably another year. Even the new Bitmain miners that are being delivered will have started production right now. This is how production schedules work. You see these things happen a year in advance. So we're not buying anything for a year from now. That would be an efficient use of capital and not a long-term yield. Like, I don't want to pay 6% for that long. I want to pay 6% for a short time and then pay you guys a lot more very fast.
What is the depreciation percentage that's estimated on the data center fund? You mentioned 90% for the mining fund. What is it for the data center? We said
we're close to 100%. There could be some slight setup costs and whatnot, but or labor costs, but we're trying to minimize that as much as possible.
For the data center fund, is the capital return after 3 years? If I just keep quiet.
Yes.
Thank you so much. How do you know that Bitcoin mining will be profitable after 5 years, if not less?
You're right. It could not be profitable. It's very speculative. It could be more profitable than I expect. It is a speculative asset. I can't control Bitcoin price. I hope this investment presents Bitcoin as an asset class to you, as a relatable asset class in terms of yield. You could also just say, I don't care about Bitcoin. Yes, you call it Bitcoin mining fund. I just like 10%, 9% a month. That sounds pretty good. You get return your capital back if I hold in Bitcoin within 12 months. But it's also get similarly if you sell it and I get cash. So it's still as just a cash investment, cash yield investment. It's a very strong investment.
I wish I'd seen this question earlier. I think it's very pertinent for others as well. How are monthly distributions actually calculated based on initial investment?
Monthly distributions calculated?
How are they calculated?
So I presented a slide on the fund management process, but essentially we transfer all the Bitcoin every day to a wallet. We sell it, and that's the strike price that we calculate the distribution of, and that also sell. It's monthly. It's usually the first of the month. And yes, there's some volatility. If you're selling at a low point, a high point, we try to plan well, but also we can't control most of that. Although we try to strike at a proper time. We pay then expenses. All that net expenses, which is right now for Fund 1, is 85% profit margin, goes to investors, and then gets part of it gets sold to pay for people who want the distribution in cash. The remainder gets sent directly to everyone's investors' wallets.
We're down to the last 10 questions. So thank you so much for your patience. What is your historical success rate in winning Bitcoins?
Because we've been in pools the whole time, it hasn't been our historical success rate. It's been the pool's historical success rate. Foundry has been very successful in mining Bitcoin. They have a lot of Bitcoin miners, and right now they're probably a little bit higher success rate than what you would expect. But over time, it should just be average. It should be very predictable. You put in hash rate, you get a certain amount of Bitcoin, and that's price per hash power.
Don't we lose most of the discount of getting Bitcoin from mining by paying tax on the passive income generated?
What was that? Sorry.
So let's say we are actually getting Bitcoins. Of course, we are getting it at a discount, the mining versus buying Bitcoin. But isn't that discount actually lost because we're paying tax on passive income?
It's a good point. I got to think about that more. So you're paying tax on the passive income. You get the depreciation, which then shelters that passive income tax. So really, it's mostly neutral event. So really, that helps there. So I think so I think it's actually much more tax favorable because of depreciation shelter on that initial run of capital return.
Why does the network difficulty in the model decrease over time?
Oh, it should not decrease over time.
Yes. Yeah, please let us know. I think I've looked at the model. I mean, it should not. I mean, there could be small bobs here and there, but if you're looking at the general curve, it shouldn't decrease over time. Let us know by pointing out the exact sheet and row number, and we'll take a look at that. I think we did answer this. How do taxes work for investors when you choose Bitcoin distribution instead of cash?
It works the same as you choose cash. You get K1. What you do with the Bitcoin, you can sell in the future, you can hold, you can leverage, you can compound whatever you want. What you do with the cash, you can do whatever you want with it. It usually doesn't appreciate, usually depreciates, but that's why Odell Beckham and lots of stars are selecting to take their income in Bitcoin. But if they select to take the income in Bitcoin versus cash, it would be treated the same way. The W2 would reflect the same. So well, K1s.
Are your projected long-term returns based on investor taking distributions in BTC or in cash?
In BTC. So that is, that adds to that element of appreciation, which I don't control. So you could convert in that model. There's an input variable that allows you to change distribution in Bitcoin from 100% to 0% or 50%, whatever you want. And that will reflect in that removal of that potential appreciation.
Down to 4 more questions. What about the security of the end product? I'm not sure what security the investor is referring to.
Well, so in terms of like cybersecurity of miners, because of blockchain network, it's probably one of the most secure. That's why we call it cryptocurrency, and it's why in general. But in terms of security of our mine Bitcoin, we do have we mine through custodian account with Genesis, but we also then send it to investors as soon as possible. We want to hold as little Bitcoin as possible and have anything at risk. We want to make sure that you have full access and full control, whether it's through a centralized exchange wallet or a decentralized exchange wallet or hardware wallet.
When will the launch of Fund 5 happen?
It depends on how long it takes to set up Fund 4. I think we're very excited about setting up Fund 4. It does help us scale into additional subsequent funds. I want to continue to provide yield for our investors, but There is the future where we have cheaper cost of capital, cheaper access to capital, as we have, as all these other big public companies do. But I love providing you, the investor, and me, the investor, because I'm investing in this as well, yield and Bitcoin. So I can't say for sure. Likely, we've been seeing this every few months. So maybe Q1 or something like that.
Will future mining funds utilize the current real estate, or will new real estate be acquired to host new mining?
It depends on how fast we need to grow. There's a deployment schedule in Sandusky that we can't get all of it at once. It's 80 megawatt substation right now, 40 megawatt load. We can get day one. We still have to build the shelf space, and so that won't happen all at once. But it should happen soon enough that we'll fulfill Fund 1 if that's the only space used. We will have subsequently more space, and we could sublease that, and that will provide revenue. Or we can have a second Fund 5 deploy in there. There's also the build of the substation, which will take a lot longer, but could be a very optimal use of capital, having that 10-year lease on that data center.
An investor asks, let's go back to the basics. If we buy 1 Bitcoin today, and since you modeled 7.5x based on Bitcoin being around 385K, so the investment is giving 7x multiple as well. What is the advantage of investing in this fund?
I think that's, right now I would probably say I would need to check the math. Because I think if you look at Bitcoin price and say it's flat, that would probably be the more optimal way to look at this. To say if Bitcoin price is flat, let's just keep it flat.
I'm also sending you this question and the name of the investor on chat. Okay. It's also 2 hours and 20 minutes into this webinar. There is a little bit of fatigue as well. What I do not want to happen is you answering something that's not entirely accurate. So let's take our time and definitely reach out to the investor with the answer. Is that okay?
Yeah. It's hard to make me do math in second, third hour.
Yeah, and well, we are live on Zoom as well, right? Let's be factually correct as well. An investor asks, is it true that depreciation on the data center fund will be on passive side, but 1% interest will be regular income? Let's ask the question the other way. Will the distributions for the data center fund be regular income?
I think we'll be structuring it as passive income, even though both of them are really ordinary income, but it'll be through the yield because it will be given at the tail end of the first year. And we do control that categorization though.
Last 2 questions. In the model, it's the rate of growth of difficulty that reduces over time. Curious to know why that's the case.
Yes, because it would be unreasonable to have a 7% growth because at a certain point you have a bigger denominator of miners, and to have the same 7%, 8% growth, it means you're producing an astronomically large amount of Bitcoin miners, which could happen. But if that happens, then you're also seeing Bitcoin price go up astronomically high, which will help change all these fundamentals. So that was what they were asking about earlier.
Yeah. So yeah, now again, that investors come back under monthly model BTC fundamentals, difficulty increase. It goes from 8% in month 1 to 4% in month 12. Mm-hmm. I think we just talked about it, right? Mm-hmm. Awesome. With that, we managed to answer 127 questions in some form or the other. So I think that's a new record for us. 127 questions. Thank you so much, everyone, for being patient. To all the 56 investors who stayed back for 2 hours, 15 minutes. Thanks, Eng, for going through the questions. Any more questions are more than welcome. With that, I'll pass it off to Eng for closing remarks.
I'm excited to present this last, our latest fund and also answer all these questions. I think it's great questions. You're increasingly more knowledgeable, and I want to continue to provide value in terms of knowledge and learning. We'll have series on how to deal with crypto taxes, how to leverage your Bitcoin, how to set up wallets, etc. over time. That's what I try to do with Bitcoin mining. I think this is a very interesting investment. It's something that we have a strong experience on. So we know we can hit these returns. Is very predictable for us at this point. But we also know that this gets you into Bitcoin. For those who haven't thought about Bitcoin, this is a very accessible way to get into Bitcoin and to get Bitcoin right away. Unlike most Bitcoin mining or most Bitcoin mining investments. I appreciate everyone's time. It's going to be Thanksgiving soon for those who celebrate. At the very least, maybe some days off, time with family. I hope you all enjoy time with family. Shiv, thank you for taking time from your family and joining me, Ollie from India. Can't wait to see you again back in the States, and appreciate everyone's time. We'll have some surprise stuff coming out in the next few weeks in terms of more education and gatherings. But thanks everyone for staying so late on a Tuesday night.
Thank you so much, everyone. Happy Thanksgiving. Be safe, and we'll be in touch. Bye.
Bye, guys.